We're snorting cap rates and shooting up cash flow here at Deal Junkie. Welcome back to Deal Junkies. It's Black Friday. We're having a Black Friday special for you. You get to listen to this podcast for free, as always. No, it's just Thanksgiving. I'm here in the studio with Trevor Howard. I'm Gabe Johansson. We are so thankful for our listeners in this podcast. We have so much fun recording it every week, and we hope you're having fun listening, and we hope you're doing more deals, because that's what we're all here to do, is do more deals. We're deal junkies.
And we haven't had a lot of deals to talk about lately, I feel like.
Well, that's how you always feel. That's one of Trevor's character defects. There's never enough deals. There will never be enough deals, Trevor. Ever.
There's enough deals
Not
out
for
there.
you. There are, but you want to be doing all of them.
We should be doing all of them. I don't see why not.
All right. So today it's just Trevor and I. So, we get together and talk a lot and have little brainstorming sessions. So we're going to do that on the air for you. And we'll let Trevor kick it off because he wants to pick my brain about something. What is it?
So this is a problem I've been reading about in all my business books and things I've been listening to and watching and learning, seeing people do. Every company that is successful seems to focus on one thing at a time, like very narrowly. So like they take all their resources essentially of that company and focus on this one constraint. So typically the idea is if you want to keep growing, this doesn't matter if you're just stable and you don't want to grow and you're just doing whatever.
Is that a real thing, to actually just hit cruise control and not grow?
I think that's what 99% of businesses do, probably.
I think most businesses are just trying to survive, to be honest with you.
Yeah.
I think in most cases they're going backwards and they're just trying to keep from going backwards too much.
That's what I've seen, because now I'll ask people a lot that we're doing business, because I hadn't been doing business for, I was just investing, and then I was kind of doing business, but I was doing business like everyone else. I was just winging it, no plan. So now that we actually think about these things and plan it out over time, I ask people what their plans are, and I realize no one has a plan. Typically, they fell into it and then they just continually do the same thing.
Well, and it's hard to stop and think about your bottlenecks and stuff when you're just in the day-to-day of your business. I mean, it's touch and go. Yeah.
So this is an interesting quote I heard too. It was you have to be careful about the question you ask yourself of what problem you're trying to solve, because you almost always solve it, but you could ask yourself the wrong question. So typically you're looking at all the options on the table based on your current knowledge, but the true answer, the true question you need to ask yourself is something that is off the table and you're not even considering as an option.
So what you're saying is you got to think about the things you're not thinking about. How do you do that?
Sometimes.
How do you get your brain to open up and think about the possibilities? You want to think about the things that could go right that you're not even thinking of, and you also want to think about the things that could go wrong that you're not thinking of. So how do you do that? For you just run around and ask a million people questions, and it gives you ideas, and you think, you go ask somebody, you're like, what did you not think of in your business?
I think trial and error is a part of it too. So you're not going to have that ability doing your first go around on this. It's a skill you probably gain over time, and then you've learned from experience, and you're like, okay, how can I'm thinking of how I can 3x my revenue right now versus I need to be asking, how can I 10x this? Because why 3x it if there's...
So you're getting into mindset. You're thinking too small.
Thinking too small is part of it, but actually taking the action, and because you will set a goal that's too small and then do it. And it could take the same amount of hours to do that small goal as the big goal. But what most people I'm seeing doing right now, they have no plan at all. So then they're just going in loops basically.
Give us an example.
I was doing this. So I was just personally brokering deals as a never ending cycle of okay, someone randomly comes in, I help them do a deal and then go from there. Another recent example, a business owner who had a fairly large business I was sitting with there. I was asking what is your marketing plan? How do you acquire customers? How do you do this? And it was just
we don't
know. It's just, and they're doing millions. But that dude stepped into that business and was kind of
So he didn't start that business.
He didn't start that business.
He bought it or inherited it.
Yeah. So that's a little different.
So somebody was the head wizard
and
on that.
Set it up on the front end. Yeah.
Yeah. So there were some systems in place that maybe didn't get passed down, or there's maybe even still systems there that are working that he doesn't even recognize.
Well, I think the thing was he's not trying to scale it also. So why think about it? It just gives him money. And it's he'll just give him money until it stops.
So that, I mean, that you see that a lot in real estate, actually, where people inherit real estate. They're not really into it. It wasn't their passion.
Mm-hmm.
The kids, they get a step up in basis. So the first thing you do is talk about selling, because you can just put a bunch of cash in your pocket. But if they don't sell, usually what I've found is that over time they decide they want to sell because it's a pain in their ass. It's like, this isn't, like the payday for them is maybe the reward is not worth the pain they have to go through and how it disrupts their everyday life. It wasn't part of their life plan. It was like, it's a wonderful thing. You would think you and I would love to inherit a bunch of real estate.
I think I'd feel bad.
Why?
Yeah, I want to do it like myself.
I don't know. You want to earn it.
Yeah, inheriting it would just ruin the fun of maybe not. Or you would go even bigger. I think we would go bigger past that.
Yeah, I mean, I think this is one of the reasons why real estate doesn't make it too many generations, and businesses don't either, because it's very, very difficult to build succession plans and to have a business or investment pass generationally.
Well, generational wealth isn't an actual thing most of the time. Like, it doesn't make it through that many generations.
Not very many.
It dwindles down.
I think, going back to my car business days, my dad owned a car dealership, and we were trying to build a succession plan for me to take over the car dealership one day. And we met with, whoever does that sort of planning. And they talked about how it was a very, very high number, like 91% of all car dealerships do not pass to a second generation. Like they're just not generational companies. And that might be that particular industry. But I mean, businesses are unique. Real estate is unique. Yeah. People are unique. And the fact that, like, I'm going to magically line up one of my heirs to have the same passion I do and have the same brains I do and the same vision to be able to take that on into the next generation is it's a lottery ticket.
There's a high stat of, like, I think it's millionaires or billionaires or something, like 80% of them are just self-made.
Yeah,
because the biggest thing you can take away from someone doing that is how to do it, not just them giving you all the things, because you'll just lose all the things if you don't know how to build it.
You don't know what it's worth.
Yeah,
and so you just go blow it.
Yeah, so you talk about the real estate deals and how it gets passed down to the kids. That's the cool part about real estate, is because it's an endless deal stream because of that. Correct? Because everything eventually dilapidates and becomes a deal again, because it gets passed down through the wrong hands over X amount of years.
Sure, everything goes in cycles. Yeah. So nobody's ever, when we call something a forever hold, it's a forever hold to that person, but it's not a forever hold to the market, because a person doesn't live forever.
Yeah, because I had the thought one time, I was like, with all the people buying real estate and fixing it up and making it nice, like, how are people going to keep flipping homes? Or everything will
be owned and nice.
Yeah, but that's not how it works, because it passes to someone somewhere else, and then they just don't care about it, and it goes through the cycle.
Or an operator. I've seen operators that fail, or they, or maybe their health fails. Maybe they're hands-on and they do a really great job. It's a pride of ownership property, and then they have a stroke or something happens, and they're not able to take care of it anymore and manage it the same way. I mean, businesses fall apart. I mean, businesses that are very old and very successful still fall apart, right? Some of the biggest businesses in the world have fallen apart, and with real estate, it's the same way. Yeah.
So there's deals forever. Once I realized that, I was like, oh, that's awesome. You can literally do deals forever, and there's going to be an unlimited amount.
And
of
if there's not, you just go find a piece of dirt and build another deal.
Yeah. But anyway, so all these businesses talk about focus and, like, the theory of constraints. So typically there's, like, one bottleneck within your business that's stopping you from growing.
Do you have one particular book you'd like to shout out for people really interested in what we're talking about?
Yeah, this is what we talked about on our book podcast too. So this one's actually, I don't know.
If you think of it, you can say it later.
Yeah,
or
I'll think about it later.
We'll put it in the comments or something.
But this is like Alex Hormozy talks about a lot of this stuff. I don't know if I read it in a book or, like, listen to a podcast. There's courses, like I said.
When you're saying constraint, you're talking about somebody who wants to grow, but there's something keeping you from growing.
Yeah, let's say, like, at property management, let's say you were a ton of leads were coming in. People are like, Gabe, I want you to manage these properties, but you don't have enough maintenance staff and you can't hire them fast enough. So now you got to figure out, how do I interview enough people to get them on and onboard them and train them, right? Then maybe that's your problem. And then now you have whatever's next, right? You continually have these problems that stop you from growing. So most people, it's probably marketing. Like, they don't let enough people know, I'm guessing. I don't know.
Yeah, in my opinion, I think the majority of businesses, the ones that want to grow that aren't, are failing at marketing.
Yeah, probably.
I think that's where it's lost, is they don't know how to identify their customer and connect with them.
So most small businesses, and this was our problem always, was you don't have an offer to a specific person, so you don't like know what you're selling. How do you advertise that if you're not selling one thing to one person? Like, just do that.
So it's too diluted. You're saying if you're all things to all people,
you're nothing
to anyone. Like you just,
correct.
So you have to really hone in on what your value proposition is, who your audience is.
And you can make like $1 million doing that, and then you can add another product or something or service.
Okay. And you can do this in real estate or business.
Yeah. So I wanted to talk about it in terms of our asset company and like, what is our constraint and what are we going through? Because I think we are banging our heads against the wall a little bit by trying to do many things. And I think there's probably like one thing, if the four of us focus on, we can solve that problem, move forward faster, to do more deals faster, reach the goals faster. But I have not been able to figure out what it is. I don't want to say it's XYZ when it's, ABC.
Well, you started this company because you wanted to build $1 billion company. That was your guiding light. And then you realized, well, that's not really a good goal. That's a good
goal.
I mean, it's a good milestone to try to achieve. But that's not, everybody wants to go build $1 billion business, but that's not your guiding light.
Of like why?
Yeah.
I don't know if that's as important. So like my thought process with why, I don't need a strong why to do something. Me personally. Like I just need to decide to do it. So for something like this, I'm thinking the why is a later thing. If you have $1 billion, you can impact so many ways. I don't know what impact I'll have 10 years down the road, but if I have $1 billion, I know I'll be able to do it.
Okay.
So like get the $1 billion first and then have the...
So what's the goal of this particular company, this particular asset company you're talking about?
I think that's where we're dividing and breaking apart, where we all four of us have different things in mind potentially.
Well, here's partners.
Yeah, partners.
So this brings up a challenge, is that we're all entrepreneurs. We all get... shiny object syndrome.
We get too much shiny object syndrome, and we think about all these different ways we could make money, and we could make money doing any one of them. Like they all work, and they could all make $1 billion. But we need to pick one and then replicate it and scale it, basically.
Yeah, an entrepreneur's mind is not built like that. Like we're not built to focus. We're not built to stick to one thing. We get bored. Like what we're looking to do is we're scanning the world at all times to solve a problem.
But it's
and
not.
We see problems everywhere.
But that's why I want to focus. We can focus on that internally though, because we will have a problem. So like, for example, we're trying to build $1 billion in asset and 20 million cash flow. So do we think first like, okay, how do we get to this cash flow number? How do we do the assets? Like whatever. Because to buy $1 billion in deals, I need to buy X amount of doors, increase the equity by that.
Sure.
Like you can do the math, right? So right now the problem for us, I think, is either not finding enough deals, maybe not doing them fast enough, and we can find enough, or not raising enough money potentially to do the deals.
Have you baked into your calculation like the curve of how this starts off slower?
It's exponential, yeah, I understand. But I want to because we have so much control to do things so much faster.
How old is this company?
We're about 6 months in, or less.
We're 6 months old, and how much do we have in assets so far?
When we close this next deal, the finished value over the next year will be like 25 mil or something like that. But as is right now, like 10 or so.
Okay, so you got a 6 month, you got a 6 month old company. It's already got 10 million in assets. By the middle of next year, you'll have 25 plus. That's it, if you didn't buy anything else, just what we're building and buying right now.
Yeah, and do you know why that's a failure?
Why?
Because we said we were going to have 200 million in the pipeline, closed / in the pipeline
by year one.
By end of year one, yeah. So we have 6 months.
So okay, so this is why I don't like goal setting.
Well, I set the goal at 100 million, then you doubled it to 200, and you're like, I don't want to think too small. And I said, okay, it's 200.
That's my problem. I think too big, and then we don't hit it, and then we're mad at ourselves for not hitting.
I'm not mad. So I think it's an actual reasonable goal, but like, and we stepped out the things that we need, but then we started working on them, and then we started going all these different directions rather than focusing on it.
So I will make a couple of comments. One is, the market conditions change. And so there are going to be years where you crush your goal, and there's going to be years where you don't hit your goal because market conditions change. So it's not always, we try to buy a deal in all markets. So the last 6 months, to me, we've been in the worst real estate market maybe in 40 years.
We just did one of our best deals.
Okay, that's good. Okay, so we can talk about that. But like in terms of transaction volume and what's actually happening, it is harder right now to transact than it's been since before you were born.
I don't know.
I know you don't because you weren't born. Yeah. But now I can tell you, I mean, you don't know because this is your first go, but to put together a $25 million, real estate schedule in 6 months, like,
yeah, that's
most people are trying to start off with a couple $100,000.
Yeah, but that's not our goal. Our goal is 200 million. It's not getting there. So like, sure, like we can overthink and be like, okay, cool. We shouldn't be able to do this because blah, 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 the market. Or we could stop thinking about that.
Okay, so you're saying I'm coming up with excuses. I'm just saying that
we bought $25 million worth of deals, so how do we do that 8 more times?
It sounds like
faster time
what
period?
I'm saying is, like, in this market to do it, I'm saying that's exceptional in terms of percentage of how many deals we took down in this market. Our market share is much higher than it will be in other years that you're happy with our numbers.
I don't know, but I think that's overthinking it. I think it's just how can we do this, and then we think through how we do it, and then we do that. Not.
And we've done really good deals this year.
Yeah, like we've done some of our best deals we've done, I think.
Because it's hard to transact, this is when you can pick up a deal. You can really pick up some sweet deals right now, or some creative structures.
I think we knew what we were looking for, and then we really went after it at that point, and then we stopped.
Okay, so what's the bobottleneck then? Because we're not looking for that same deal again.
So that's my question.
We can't find it.
I think that's what we need to figure out is what is the bottleneck? Is it the amount of deals we are looking at, or is it the amount of money we have to close these deals, or is it the speed at which we do?
I don't think money is a bottleneck. I think we can always find the money.
Okay. So you don't worry about that at all?
No.
Because I was thinking that is the bottleneck.
Well, you might not be able to find a good enough deal to raise money. That's your problem. You don't have a good enough deal. But I mean, I think if the deal's good enough, you'll always find the money. I'm a firm believer that the money follows the deal. And if you're not good at fundraising, or you're not good at finding debt or whatever, then you got to find partners, or you got to go build that skill set. It's just something you don't have yet, but we're working on it. We have partners on our team that are good at doing that. I mean, we just did a $3 or $4 million raise, and successfully. I mean, and
we started that late, and so that's why I was thinking that is the bottleneck, because it took a while. We started it late. We hadn't done a ton of syndications. We did it all properly.
We're a brand new company. Nobody even knows us yet.
Correct. So,
I mean, that's pretty good. When you look at what we've accomplished.
I was thinking we needed to raise $36 million.
Yeah. Okay.
But the way
what are you going to raise it on, though? Like, you can't raise it on the brand because nobody knows the brand yet. So you have to have a huge deal to do it.
Okay. So
we don't even qualify to buy a $100 million deal yet.
Yeah, we do.
Do we?
Well, we can find someone who can help us do that.
We'd have to get a KP.
Yeah.
So a key person to sign on with
Paul.
us.
Would Paul?
Because your net worth has to be higher than the loan amount. Yeah.
Yeah, equal to the loan amount, and
I'm not there yet.
Yeah, we're not that. Well, we're pretty far off, actually. We're not to $100 million.
You don't think we can do a $100 million deal?
No, we definitely could.
With the right person.
We 100% could.
We'd have to give away a lot of that deal.
No. We would have to give away about 5% of that deal to get a KP.
Okay. That's it?
Yeah.
All right.
I mean, would you go if you went and underwrote a deal and they're like, hey, you just got to sign on this deal. We raised all the money. It's just a typical value.
I don't know. Am I signing on a $75 million loan for 5% ownership?
You own 5%.
I'd have to sleep on that one.
Yeah, but let's say you like the operators. Let's say it's Mark's deal. And Mark's running the whole deal. You're worth $100 million.
Yeah, I'd still have to sleep on it.
So you're scared it's too big of a deal.
No, I just haven't got that far yet. I'm not there yet.
See, that was interesting too, because I was listening to Grant Cardone interview. Shout out Mike, his favorite guy. But like when you start listening to what he says, it's kind of insane how he just thinks. Like when you start listening to like just simple statements he makes, and he talks about like the deals he's doing, it's crazy to see him. Like he didn't know how to do a $100 million deal at first, but.
What was he worth when he started doing a $100 million deal, though?
I don't know, but a $100 million deal seemed really big to him, and then he did a $1 billion deal after he does this whole 10x thing.
Yeah, I think your brain has to adjust, you know? And like we talk about, we built a $25 million schedule in 6 months, and I think a lot of people listen to that number and they think 25 million sounds like a really big number. Now, to us, it starts to sound like a smaller number because we're trying to move up into bigger.
We're failing it.
I mean, it's just a perspective, right? But as you do bigger deals, now you go back. I mean, I remember the first time I bought my, duplex or a fourplex, and it scared the crap out of me. And now I own bigger deals, and now a duplex or fourplex is like, running down to the store to grab some groceries. It's like not a big, It's not a big deal. It's not a big deal anymore. $1 million deal, $500,000 deal is nothing anymore. It used to be, it blew me away. It was scared the crap out of me.
Yeah. So constraint then. So you don't think it's raising money? Because my whole plan with that was like, okay, you advertise, you start doing all the marketing, you're giving out the resources, telling people what you do more and more, and you raise $100,000 from 360 people. There's your $36 million.
Yeah, but you're thinking of okay. So you go raise the money, and then what are you going to do with it?
So I think that's over time. You're investing in deals. So I think you're piling up the money ahead of time, getting the interest, right? So now you're at the same time bringing the deals through, and then you're pairing them.
How do you get 36?
I don't think
360 people or whatever.
I don't think you do it all at once. So I think you buy many deals through that, right? So you have we raised $3 million to do an $18 million deal, 13.5 cost. So that's like 30-ish percent, 25% down, right? So we raised the first three. You're doing a deal a month maybe off that of $10 million deal size. $3 million at a time.
So when you're raising your 36, you're talking about this is 10 deals.
Maybe, I don't know.
So then you just got to go raise another 36 on your next 10 deals. Like, I don't understand. Like, why do you have to raise $36 million?
Well, I was thinking, $36 million gets you to $100 million.
Oh, I see.
Of just that.
Well, it still doesn't get us there because you said we need $200 million.
Well, that's just that deal type because we can buy deals on our own too.
Sure, without raising money.
Yeah.
Yeah.
So I was like, okay, that gets you started through that. Plus, you can, if you're doing development or value add, you can leverage that farther depending on what the end value is. So that's what I thought our bottleneck possibly was, but you don't. So then I was like, okay, so we got to figure out how we go get this money raised.
Yeah, I'm just, nobody will ever convince me otherwise that the bottleneck is not in money, it's in deals. There are deals everywhere, but you got to find them, and you have to attract them. You have to build a reputation and a brand to where those deals come to you.
Yeah, so then I was wondering if it's deal type also, because now I was like, okay, can we call the bigger players or see the guys, like if we're like offering low and they laugh at us or whatever if we're trying to offer XYZ on a deal. I'm like, okay, how are these guys buying this deal? How does it make sense for these bigger players to buy the deal? And then should we shift to doing that? Like, was the next thought.
Are you talking about institutional sized?
I don't know, just bigger than us. Because there's levels to.
Yeah, you don't. I mean, once you get very much bigger than us, you're institutional,
and then you just have.
And now you have cheaper debt, you have cheaper equity, and you can buy a deal with different metrics. You're looking for very large institutional grade, stable assets that qualify for the kind of debt that you can't put on other assets, and it just makes the numbers work. It's not when you're buying $100 million deal, all it has to do is go up 10%. You made $10 million. I mean, it's nothing. I mean, it's just little tiny fractions of movements, and you just make tons of money because of the scale.
Okay. So what do you think our constraint is then? Finding enough deals?
Well, I think we just answered the question is we have to develop our brains and our horsepower to be able to do bigger deals. Like it's not about
a one-off deal or is it many deals?
It's I think you got to we got to go try to buy $100 million deal.
So like the focus should be like, how do we do this $100 million deal?
And then we'll fail and we'll only do a $50 million deal, and then we'll be like, oh, maybe next time we'll do a $100 million deal.
So then do we say no to all the $10 million deals in between? Because I feel like
No, I think you say yes to all the deals.
Okay, so it's deals then.
Yeah,
we
deals.
Just do it.
Deals. You do as many deals as you possibly can.
Okay. And then do you try to do do you narrow down the buy box on those deals so you can replicate it faster?
That would be the idea, and that's the problem we're running into is like, we have a buy box, but it's narrow enough to keep us focused, but it's also narrow enough to not be filling up our pipeline as fast as you want it to be filled. And so I
think our buy box can fill it, because now that I've been looking at the deals, I have like 4 offers I got to write on deals I think we'd actually buy after 3 hours.
Well, what are we sitting here for? Let's go write offers.
I got to show them to you guys at our meeting. And see.
You're the CEO. Go write them.
But then that's the next bottleneck of like, having the system to go through the deals. 'Cause I'm like, crap, now it takes me so long to do all these other things and write the offers and like underwrite them. So now it's like there's basic steps we do.
Those are bottlenecks with you.
Yeah.
So once we found the deal, now we can't get the offer out. That's a different bottleneck. You need staff, you need team,
so I'm trying to build us an acquisition system right now. So it's continual deal flow. So that seems wise to you then. Like that should be the focus. How do we crank the deals through the front end?
Yes.
That is the current constraint.
Yes.
Okay.
How do we load the pipeline as fast as possible?
Okay. And then the next constraint may be the money later, and then you figure that out later.
Well, and that's part of this is also just being able to sleep at night. And this is the part that keeps me up, is like once we get to the point where we're putting up our own money. Like as an example, we've got the deal we're raising money on right now. We have $100,000 of our own money, non-refundable released, or close to that, right? With the
something like that, yeah.
It's $90,000.
We might have more guaranteed on top. Plus, we spent DD or something.
So and DD, yeah. So
like 100 to
so due
200
diligence, we're over $100,000 into this thing,
yeah,
non-refundable. Well, now we're painted in a corner if we don't. Like if our investors don't come through or our loan doesn't come through on that and we don't close that deal, we just lost $100,000.
Does that stress? That doesn't stress you out. It's only $100,000. Like it's just the cost of doing business.
Yeah, that's true. But we're not going to get to where we want to go losing $100,000 on every deal, and not to mention the amount of time and effort that it took.
That's the big
over the last 3, 4, 5
if
months.
Don't close the deal. Yeah,
you don't close that deal. We just wasted half a year and $100,000+. Like
yeah, the $100,000 doesn't really like it's whatever. Like that part doesn't because we have 4 of us in there. We each lost $25,000.
Yeah, it's not life changing, but it's still bad. Like it's
not optimal.
You're going to lose EM every once in a while, but you don't want to. I mean, especially once you get into $200,000. Like I've got another deal with $200,000 released already, and that's just. I mean, I don't know. For me, I've lost earnest money before. It just doesn't feel very cool. I don't want to lose a couple $100,000.
No, I agree. But I think that's like that's part of the game of that is like you.
Yeah, Logan talks about how earnest money is part of the game, and you know that some percentage of your earnest money is going to get lost, and it's just part of the cost of doing business. But to me, you got to know how to efficiently move deals into your pipeline. You need to know how to efficiently move them through your pipeline to closing, and you got to close those freaking deals. Like the pipeline can't stagnate. You got to be able to save a deal. You got to be able to bring a deal to the finish line, because if you fail too many deals in that pipeline, we're all going to be worn out. We're never even going to want to put another deal in the pipeline. Like we have to have repetitive success over and over and over again.
That's why I think you need a system of like, okay, here's the things that happen every single time. So
sure.
We make sure we do the DD on it, don't miss the things, / move it forward faster.
Yeah, but to your point, like we can't even get to an offer yet because we're bottlenecked. You're the bottleneck. We just figured it out.
So I just started last week. Come on.
Oh, okay. All right. We got a problem. We can't have the CEO be our bottleneck.
I'm not Dane's CEO.
There's a problem. No organizational structure in our partnership.
We were more organized than we were a couple weeks ago, though.
Yeah, we're getting better. We're getting better. We're a 6-month-old company, guys. Come on.
So
give us some slack.
Yeah, but I mean, part of that. So how do you fix that? Let's say it's truly acquisition. So how many deals does that look like that we need to be having coming through? Because we won't be closing a deal a month, basically, right?
At least.
Yeah.
But it also comes down to if your benchmarks are set on dollars and not on doors, then your benchmark is going to be on doing bigger deals, not on more deals. So
I think we need to decide that, because that's 2 very different things.
Yeah, I think if the benchmark is on dollars, we have to chase bigger deals. And this is what so as a broker, I represent institutional grade investors, and these guys, it's funny because when they first started calling me, they'd be like, "Hey, Gabe, we want a $50 million deal."
See, they have a system. They have that random guy they hired to keep calling you that doesn't know anything about the deal, but he's
actually the guys who call are the VP of acquisitions. They're the guys that sign the offers.
Okay.
So in these companies, they have you talking to a head wizard.
Can we sit down with them? Are you friends with any of them?
Yeah, I'm friends with all of them.
Would they be like?
They might talk to us. Okay. Sure, we can take them to lunch, but I will tell you that the way they operate is purely on very, very small margin. And so when I bring them a deal, they're like, "Hey, Gabe, I want a $50 million deal." I'm like, "Yeah, there's 3 of them in Salem." Back in the day, when I started, it's like, you're calling the wrong market. I don't have deals that size.
Yeah.
They're like, be like, "Okay, well, find us something $25 million or whatever." And so the institutional buyers, which there aren't very many of them that come to Salem, they will buy, and I kind of broker in that space now in the $20 to $30 million range. They will buy in Salem, Oregon, but they are specifically looking for. I mean, they have a model, which we have. They have their buy box.
It's a very tight buy box, right? Typically.
It's pretty tight, but they want newer product. So what they do is they go around the country and they identify their favorite markets. And those markets are done by some algorithm of population growth, income growth, politics, whatever's happening, rent control laws and things like that. And they go around and they pick, let's say, 10 markets that are their favorite markets. And from there, they go, who do we need to talk to in those 10 markets to find our deals? And they call and they say, here's specifically the deal I want. I want only your market, Salem, Oregon. I only want deals, whatever it is, 25 million plus, 50 million plus, whatever. We only want multifamily. We only want new construction or something built in the last 5 to 10 years. This all revolves around financing, by the way. What they're doing is they're going out and they're doing the legwork to go find the buildings that the government-backed debt wants to land into. So Fannie and Freddie, agency debt, you hear it called GSE. They're looking for deals they can land that kind of debt into that are going to be a slam dunk for Fannie or Freddie. Because they're a preferred borrower, they've done a lot of deals with them, and they're doing the type of deal specifically that those agencies want. They can go buy that deal and get debt nobody else can get.
So it's cheaper debt and longer term debt.
Cheaper debt, longer term. They can take seconds against them. They can do all sorts of different weird things.
And then they're just using pension fund money typically, or like stuff like that?
For the equity or for the debt?
For the equity.
So when they're raising their equity, they're just going after investors and
like syndicating it from individuals.
Yes.
They're not going to.
Well, they probably talk to fund managers and things like that. Okay. But there are people out there with hundreds of millions of dollars that just look for operators like us to go put it into the kind of deals that they want to be in. The reason they would go into an institutional size deal, a $50 million deal, has fees. So from a sponsor standpoint, it's fees. So they're charging an acquisition fee, a disposition fee, a refi fee, an asset management fee, and they're kind of like a management company. Like they're making their money on fees, and then they also get to own a percentage of that asset and benefit from the appreciation over time. But they are getting paid to be the operator. Mm-hmm. So, the other thing is like it's stable. Like when the vacancy moves up or down, the numbers move up or down. Like in a new asset, I'm not going to have a huge amount of capex. I'm not going to have $30,000 turns. My roofs aren't going to suddenly go bad. I'm not going to find out I got a building with 4,000 gallons of raw sewage underneath it. Like these are just, you will run into problems, but you're not going to run into the problems that you run into like we do on value add. It's smooth. So when you're talking about scale and bottleneck, the way we buy the biggest piece of crap in town and we go clean it up, put new tenants in, raise the rents and do all that, that's how we make our money. But if you're going to be a national operator and you're going to operate in big markets and have people flying around looking at deals, you can't go buy that stuff. You don't know who the contractors are. You could try, but I think it'd be very hard. But you could buy, you could go find a few brokers that sell new product in that market, and you could close on those deals. So you could put the management company in place and then manage that management company.
Yeah. Is that then they're just doing like the Grant Cardone model at that time where you just hold real estate for a long enough period of time, it gives you a return?
Yeah. And the idea is it's not like we're so focused on is this a good deal or is that a good deal? They'll buy a deal at a price nobody else would even pay. Like they're not worried about ripping the deal. They're trying to get the biggest dollar amount loan they can possibly get to buy the biggest asset they can possibly buy so that over time the appreciation and all the benefits, the 4 economic benefits that we always hear Logan talk about, your appreciation, your depreciation, your principal buy down, cash flow, all of those things are magnified to, once you buy a deal, once you buy your first 100 unit deal, you'll probably never want to buy another deal lower than 100 units because you make so much more money. Mm-hmm. Your management costs are lower. Your utility, everything that the way you run that, the efficiencies of scale that you find in a larger property. There's a reason why Grant Cardone buys 300 to 500 unit complexes, Class A in the areas that he goes into because it's a huge dollar amount, right? So you pick up that appreciation. I don't even know if the cash flow is that sexy.
Well, I think he does lower leverage, I think, on some of those / cheaper.
Well, he's also crowdfunding and people are putting in, $500 here or whatever. And so he's got millions of investors.
I think it's 5,000 minimum, but yeah, it's his play when I looked at it, because I filled out their sales funnel and called them, and I was like, I wanted to see their OM and like, what does the deal actually look like they're doing to hit these returns? They wouldn't give it to me. They just wanted to send me like a whole BS long really thing. But I just
so they wouldn't tell you their model.
I probably could have had I dug longer. I was like, I don't need to spend more time on
It's going to come down to a spread.
Well, all it is he gets their money in for a like 10-year hold, and then he gives them like a 10% return.
Yeah.
Like it's just you hold real estate long enough, and he just
I think one of the things is, number one, he's a celebrity.
He's really good at raising. That's
he's people like him. People that do like him, and they feel like I'm never going to be able to invest on my own, and I'm never going to have enough money to buy anything. But I've got, if it's $5,000 minimum buying or whatever.
Sure.
This is a very low. I mean, it costs me more than that to go buy a house, and I can put $5,000 into one of Grant's deals, and I get to own a minor piece of a 300-unit complex or whatever.
Yeah. But anyway. So back to our one focus. So it's acquisition, finding deals should be the focus.
Well, where is our bottleneck now? Is it that we can't find big enough deals, or we can't find enough deals?
What is a big enough deal? So the deals I have right now that I want to write on is a 16 unit. So that's probably like a $2.4 million deal. A 40 unit, that's a $4 million deal. And a 100 unit, that's like a $12 million deal.
In another state.
But that one I'm only interested in because of the model of the deal. Had it not been the personal relationship, I wouldn't be interested in it. I don't think that deal will work after I underwrote it too. And then there's one other deal that's somewhere in that size too. So you think those are potentially too small of deals?
I think looking at deals out of state right now is shiny object. I think looking at other asset types is a little bit shiny object.
I agree, had it not just dropped right there. Like, here you go.
Yeah.
And then it takes me 20 minutes to look at, have a conversation, and be like, this is how we would do it. If you guys would do it, great.
Well, these are the spiritual principles of real estate. Like, if you go chase good deals, you're not going to find them. But if you attract good deals, the ones you're supposed to do are going to land in your lap. The problem is if you just take every deal that lands in your lap, you're going to do a couple that really hurt. And so you got to be careful. And sometimes you go, well, it came to us and we really like it. I mean, we really have to sit down and talk about if we're going to leave the state. We don't know the laws. We don't have infrastructure. Here we take a lot of our infrastructure for granted with having the property management teams and maintenance teams and contractor
connections.
We have a lot of relationships and connections, and people around this area know who we are. And so it's easier to
That's not the bottleneck you're talking about. You're saying deal flow is the bottleneck.
Well, part of deal flow is your reputation and who you are, and are those deals going to come to you? Think about who has the deals. Like, you can go out and make all the calls yourself, send postcards, hire VAs, do whatever you want, right? The real pros that are finding deals are brokers, and there's only 10 or 15 of them.
That's where I got all these deals, yeah.
Yeah, they come from brokers.
Yes.
And so then what you're really doing is now you're building a broker network that wants to get paid and knows that you stand out from their other buyers. Because number one, in this market, not a lot of people are buying, and we are. So there's one golden star on our report card. And then number two, we're friendly, and we don't yell at people, and we don't do stupid things. Number three, we don't retrade or back out of deals unless the deal has to be retraded. If we can act as a really good buyer and we make sure that the seller gets what they want, we close the deal, the broker gets paid, there's minimal drama, we show that we can raise the money to do a deal. The second that broker gets that check in their hand, we're legit. It's done. Now you just got to say, I want 3 more. And they're going to want to just keep bringing you deals.
So just for like on-market deals, because we could broker them and take fees and whatnot, do you think just for good faith to get brokers to bring you more deals, you're like, hey, I know this on-market, you represent us because I want to show you, I want to do more deals with you?
I mean, if it's already on the market, I would say that's on a case-by-case basis. Like maybe to get in good graces, you say, hey, you can take both sides of this, or we'll represent ourselves and whatever. That's how the institutional grade buyers work. Is they'll allow
I don't care about fees,
allow the brokers, if they're set up to take both sides, they'll allow a broker to take both sides of the deal. Most of these institutional buyers have in-house counsel. They have general counsel, and so they write their own offers. They write their own addendums. They do all of the paperwork. So as a broker, which is interesting, the biggest deals I do, I don't even do the paperwork. I'm literally just a guy that puts two parties together and then just keep the wheels from falling off. I call it air traffic control. I just keep the planes from crashing into each other, basically. Yeah. So, I think that when it comes to giving a broker what it is they want in this market, even just to take their half of a sell side is probably enough, because there just aren't a lot of deals trading. What you want to do, though, in order to get the right deals, is catch those deals before they hit the market. And so a lot of the big brokerages,
they have to sit, right?
Maybe. So if they're overpriced, they have to sit, because then they got to get, we call that, they're not ripe yet, right?
That's where I feel like right now it's like, okay, I make a good offer to what the seller should do, and then they don't want to do it, and then they just wait, and they're like, oh, I should have done that.
Well, right now, in current market conditions, there may be more opportunity with tired sellers that have just been on the market, that are just like ready to give up and go, fine, I'll drop the price $1 million or whatever. I think it's a really, really good time to go out and find out if a seller's willing to be more reasonable with their price or be creative with their financing to make it easier.
I have one like CavCourt, I think, because CavCourt, it was at $5 million or $6 million, then we bought it for 3.2. I think I have another one of those where it's like they gotta.
Well, let's do it.
Yeah.
Let's go write the offer.
That's right. I got it for me today.
Someday you'll look at a CavCourt size deal and you go, that's too small. But we still want, if you can take a deal for $3 million and make it worth six or seven or whatever with $500,000 worth of upgrades, everybody wants to do that. It's a unicorn deal.
Yeah. But okay. I'm really trying to figure out what is the bottleneck, though. And so it's acquisitions.
Well, so first tell me where we're at versus where we want to be. We said we want $200 million in the pipeline by when?
So in about 7 months, we want closed and in the pipeline.
Closed and in the pipeline?
Yeah.
So how much do we want closed in the next 7 months? Would it be like half? 100 million?
Maybe.
And we're only going to have 25, so we're only a quarter of the way to our goal. Is that what you're saying?
Yeah, I want it closed and in the pipeline, like under contract. So that's...
Okay, so
that's 18 months-ish worth of deals.
Okay, so we need to do bigger deals. That's the problem. Is we need more deals, and we need some of them to be bigger. It doesn't mean you say no to a $5 or $10 million deal. It's that you say yes to all the deals that are deals, and you try to make sure that we're chasing as our target maybe $25 million per asset.
Okay,
but now
do we have to go out of market to do that?
Can we? Well, yeah, we got to go out of Salem,
because there's over 100 unit complexes though in the state. There was like, what did I say? Like 4,000. There was some number way more than I thought there was going to be.
Of owners or buildings?
Buildings.
Of 100 unit?
100 unit plus complexes.
4,000?
There was something like that.
That's a lot. I don't think so. Maybe. That seems like a lot.
You keep talking. Okay, let me see here. It was something. Maybe it was 400.
So here's my next question: is can we handle a $25 million deal? Can we buy it? Can we run it? If it's
is the bottleneck raising money? Because now we need
you're getting like you were saying in the beginning of this episode, you run into new bottlenecks. Okay. So if we go buy 500 unit projects that are all value add, we're going to have a new bottleneck because we don't have the team to run 5 value add. Just Logan and I, we have our 100 unit project in Corvallis. It takes a small army just to run that thing because of the lift that we did on it. So, you can't manage 5 of these things at once with the team that we have.
So guess how many over 100 unit complexes there are in Oregon?
Well, you told me there's 4,000.
I was wrong.
It sounded high.
I was wrong.
Maybe there's 400.
There's 1,179 minimum. This is probably pretty accurate.
Is this Chat GPT?
No. It's CoStar.
Okay.
So this is then probably most of the 100 unit complexes in Oregon are on CoStar, I would imagine.
So there's 1,000, 1,100.
1,200. Let's round up.
That's not very many.
I don't know. What if we only buy 1% of them?
That's not very many.
It's 12.
Okay. But got to buy them right now though to hit your numbers. These are like $15 million complexes.
So if we had 200 million in assets,
most of them, some will be 25
at 175 a door, We need, oh shit, we got to buy 1,100 units.
So you got to buy 10 of them.
Yeah. So we got to buy 1% of all the.
But you got to buy 10 of them by next summer. Is that what you're saying? See?
Okay.
Maybe we set the goal too high. Maybe when we talk about like this scales up and it gets bigger and bigger as you go.
Yeah.
Maybe you start by buying our first 100 unit by next summer.
Yeah, maybe. I don't know. This is what we thought we needed to get done in a year to be on track over like 10 years to do all the goals we wanted. We had to start acquiring assets with scale and fee structure in mind. We had to establish the actual fee structures we take on those deals.
As a sponsor.
Yeah, for some of those. And then a seamless investor offering and marketing package, marketing team or person in place. Finance presentation packet built out for bank ourselves.
We've done most of that.
Yeah, I think it's cool to see because we did this with our other companies and like as it went, they changed and you mark them off and you're like, wow, it worked. All the things that I thought I needed to do, if you do them, it works. But yeah, we are doing that, and that's for raising money though, looking at all this basically.
So you say I overthink it when I say that there's not a lot of deals transacting, but of those 1,100 deals that we want to buy, how many of those sellers want to sell in this market when rates are 6% on commercial, cap rates are higher than they were before? Like the values have dropped on multifamily. What do you think? 20, 25%?
Yeah, maybe.
I mean, I don't know.
It's hard to say because it's not trading.
Somewhere in the 10.
It's like people aren't selling at that big of a discount.
Probably 10 to 20%. Well, that's because there's not a lot of deals
not
trading.
trading.
So when they sell, it's a deal that has a lot of meat on the bone. It's selling because the rents are $300-$400 below market, and somebody sees that there's enough meat there. Yeah, there's enough upside to get it done. So you're buying so between we call it value add versus turnkey. When you're buying a value add asset, you can close a deal like Mike just did, 4.5% cap rate on a deal in Vancouver because he sees where he can go with the rents and all the things he can do. But if you buy something turnkey, brand new, you're not going to pay a 4.5 cap because there's not enough meat on that bone. Like you're going to pay a 6 cap or close to it.
Sure.
Because rates are 6%. You don't want negative leverage. You don't want to be borrowing money at a higher rate than the cap rate on the property.
Yeah. So we need to get to like 1,000 doors. Maybe that should be the target.
So now you're back to doors instead of dollars.
I don't know.
I mean,
it's a good metric. When I watch the like other syndicators, a lot of them target door count.
Do you think once we get to 1,000 doors that will change and we'll be like, this is pretty cool? Like,
Well, this is step one.
You think you'll relax a little bit and you'll be like,
no, you got to ramp it up at that point. That's step one to get to the 10-year target.
So when you're driving a Ferrari and you're living in the mansion and you're doing all the stuff, what keeps you motivated to push harder?
The game. Also, like, I don't want that stuff necessarily. Like, I'm assuming I'll buy that stuff at some point, but just because you have enough money.
You better learn how to drive first.
Yeah, I shouldn't have that. I'll die if I have.
We're going to get you a car. We'll get you a Ferrari with bumpers all the way around it.
I'm going to slam it into so many
We'll
curbs.
attach snow plows to it.
No, I think if like someone has more meaningful thing like you, like what if you could write $1 million check to Valor? That'd be pretty cool. That seems cooler to me than
giving the money away.
You have an impact on people's lives.
So Bob Doshi, one of my mentors and partners, he tells me we call it catch and release. So part of the game is the money flows through. Like you make the money, but you have fun with some of it and you give some of it away and you run your business with the rest of it.
Yeah, I think it's more fun to have an impact on other people with that money than on yourself.
Sure it is.
Like once we wrote our first check, I was like, oh, that's really cool to like just give them the thing. And you could literally just spend $100,000 and be like, hey, I'm going to pay you $100,000 this year, and this is your mission for the whole year. Go do this thing or solve this problem or do whatever.
Yeah.
And you can buy
you can have a lot of influence and make a lot of impact.
Yeah, it's pretty cool.
Yeah.
I'd rather do that, I think. But so like that, I don't know, but I don't feel the need to like have a mission like that right now. I just want all the money so I know later I can.
So what drives you? What's the fire behind all this? What makes you want to do this so bad?
I don't know what else to do.
You tried to run 100 miles. You could go run all day.
I'm doing that.
Oh, okay. So you're doing deals and running.
I want to do more deals. Yes. I mean, this stuff it's okay. So anything that I'm interested in, there's a community involved around it. It's easy to access and it has unlimited growth potential. And like, that's what this has. So it's entertaining forever.
Okay. How'd you figure that out about yourself?
I thought about all the things I do and why I do them. And then I was like, okay, these 3 things are common between everything I've liked to do.
In a very, like, that's a very robotic way of saying you like to make friends and have fun.
Maybe. Yeah. Yeah. Sure.
I like it. What did you say? A community?
So there's a community involved around it. It's easy enough to access and it has unlimited growth potential. So like I played basketball every day and did all that thing. Played in college. So it's like, okay, it's easy. I can go buy a basketball for $20. I can walk outside, walk to any park. It's easy to access.
And unlimited growth.
You can go to the NBA. Your skill can always improve. And there's a ton of people that play it.
Okay.
So like anything, like real estate's the same way.
Okay.
So like anything I do is, I realized it's those.
So you think real estate's easy to get into?
Yeah.
There's a community of people around it, and there's unlimited growth.
You can take it to any point you want. Yeah.
All right. That's
so
fun.
it's an infinite game. You can play it forever.
I like it.
Yeah.
I like it. So now you're trying to play the game, and you're trying to set some. What is this you're trying to do? You're trying to set some.
I'm trying to set targets so we go for them rather than just let it happen to us.
So if you're playing basketball, this is your target that you want to be a D1 player or you want to make it to the end.
My biggest regret playing sports was not thinking big enough with them and limiting myself and then practicing the wrong things.
Okay.
So like I applied that to what we do now. We got to think bigger, try harder.
Okay. So then we think bigger. We say we want $200 million schedule and we don't hit it. And then you're wondering,
you keep going. You only fail if you just stop. So it's like I don't know what time frame I'll hit this in. This time frame seems reasonable, just so I can start planning. Like I know these things need to happen by this date. It may happen sooner, it may happen later. It doesn't really matter at that point.
That's how I tend to set goals.
Yeah,
it's like
I
want to do this thing as soon as I can possibly do it. And when I do it, I'm going to reward myself with this little thing over here to remind myself I did it, and I'm going to set my goal higher.
Yes.
And what ended up happening for me most of the time was even before I had got to that first goal, I was already setting a goal further, and then I hit my first goal and didn't even realize it because I was already aiming for a bigger goal. So, a lot of this is just thinking bigger. It's just getting your mind expanded to the point where you can even think about buying $200 million worth of real estate.
Correct. I think we can do it even faster if we really think about what the one constraint is and all decide this is the one problem we are going to solve, and then we solve that, and then that creates the next problem.
I can already see our next problem. We're not big enough to handle the amount of assets you're going to buy.
Operations wise, yeah. Because we're not.
But we'll build out the team as we go.
At that point, yeah. Okay, so the constraint we've determined is acquisitions.
I believe so.
So that means all 4 of us should be trying to figure out how do we find more deals. Like we shouldn't be thinking then, how do we raise money?
It's funny. I've had thousands of conversations with people and sat and had coffee and talked about real estate and given them my whole sermon about why people need to own real estate and talked about, how do we build your buy box? How do we figure out what is the best deal for you and how you run it once you buy it? And at the end of every single meeting, it always comes down to the same thing. Now we got to go find a deal. Every single meeting, it's every single time.
Well, that's where it starts too.
We have to go find a deal. We have to go find a deal. So every single day, that's the infinite game that you're playing. Is you got to go find a deal. I don't think there's any shortage of money that's going to chase the kind of deals that you're going to find. So it's deals. Your next unicorn deal. The next thing will be not giving too much of it away because you'll be like,
we gave away a lot.
We gave away a lot on our last unicorn deal. You're like, oh crap.
See, but the mindset there is we're not doing one deal. We're doing an unlimited amount of deals for a lifetime, so it doesn't matter because it's more important to do the deal.
Sure, do the deal.
Yeah,
do as many deals as you possibly can.
Yeah. So then it's okay. We have to find the thing. So we need a system. So because the bottleneck would be me. If I am just like me, I have to do the actions to find these deals and generate them. That's not sustainable.
Deals should come at all of us.
No, correct. But I think there needs to be a way where we're like, okay, this is how we generate these
You need
leads.
a model. You need a model, and which you
system.
have, and a system. And as a deal comes in, we need to identify very quickly what a deal is for us. Like you said in the beginning of this episode, you said there's deals everywhere. There are deals everywhere. How do we filter those deals to know which ones are our deals?
So I think what you do is I think we have someone building broker relations 24/7. I think we have someone underwriting the deals on the front end, and then you have your criteria and you just plug in the model. It's easy. And then you have direct outreach to sellers via mail and cold calling.
Yeah, so you just said it. You need structure. You need a VP of acquisitions.
Running all that.
You need a marketing team.
Yeah.
And you need an underwriter. You need an analyst.
Okay, so that's what I'm trying to build right now.
Every syndication has all those things.
Okay. Now I'm
You're not-
thinking too much.
You're overthinking.
Yeah.
Yeah, and by the way, not only just every syndication has that, every business has that.
Yeah.
Right? I mean, every business that we're involved in has the same exact thing, other than maybe like acquisitions. Maybe VP of acquisitions is something else. It's, business development, or it's going out and find customers, bringing in customers.
It's lead generation.
Yeah. So there's the front end of the business that's out chasing new business, and that's what you and I have fun. You and I have fun chasing new deals and underwriting deals and talking to brokers and having fun. That's how we have fun. And then our partners, Dane and Mark, are a little more back end guys. They're a little more behind the curtain. They might be helping us underwrite or help find financing or raising money or helping run the asset management team. But they're on the backside. Like, somebody's got to create the mess, and then somebody has to clean up the mess.
Okay. So we need to all focus on acquisitions then. And how do we get this to crank?
Well, I think your whole team doesn't. I think that the acquisitions team focuses on acquisitions.
I think there's one bottleneck within the company. If you solve that one problem, then everything else becomes relevant.
So then the asset managers have to asset manage as efficiently as possible because they know more assets are coming, and they have to do it in such a way where we're ready to go take more deals and we're not bottlenecked with those assets. Your marketing team has to always market with the guiding light that we want to do more deals. We're just looking for the deal type that we're looking for.
Okay, so most important next step, what would you say it is?
Organization.
Organization.
Mm-hmm.
Okay.
We need an org chart. We need to build.
We have an org chart.
So we just need to we need to figure out who's on our team. And
you're head of acquisitions on org chart. Why is this? Why am I thinking about this? You should have this solved.
I did not put myself as head of acquisitions.
I think I put you there. And I think we told you. And then
I'm the integrator. I don't do anything. I just go find the people to do it.
You are. Okay. I think we need to focus on this more, and we need to say no to everything else, basically.
Yeah, Mike points that out in a lot of episodes where he says it's more important the deals you say no to than the deals you say yes to. And that's maybe what we need to do. Instead of defining exactly what our buy box is, we should define the type of deal we're not going to do. Maybe we're not going to do an out-of-state deal. Maybe we're not going to do some new asset type that we've never done before. It's really fun to learn a new asset type.
I was thinking about it with our storage. If we were buying the storage complex without someone who has done that, it'd just be a pain in the ass.
We'd never do it.
I wouldn't want to do it either.
But we're testing. This was a dip our toe in to see if we like this asset.
This was it fell in our lap, and
we went and listened to AJ Osborne talk about storage, and I told you let's go buy a storage facility. And within 30 days, one landed in our lap that we could leverage into, and we had a partner who could run it. And it was like, well, let's try it. Let's see what we think. I mean, we'll find out if we love it or hate it. If you don't try it, you wouldn't know. For me, I spent a lot of time trying to figure out what the best asset type was or the best deal structure was. They all work. And so I just ran around with a bunch of different partners, and I just tried a whole bunch of different things. And I still like multiple things.
That's the other business model is now you have all this back-end stuff. So you have a system of okay, we know how to find deals, but we don't know how to operate it. So we apply our acquisition system to a different asset class with a partnership of an operator that knows how to operate it. And that's how you can increase scale as well.
Well, that's exactly what Paul Curley did is when multifamily would trade in 10 seconds, you say, I want to sell my apartment, and you'd have 10 buyers lined up around the block before you even went to market. It was very difficult to get creative structures and seller carry and stuff like that, because why would they? Why would a seller want to be creative? They could just go trade instantly. And so we said, well, guess what? Nobody's buying office or retail. We can go mess around in these other asset types, and guess what? Nobody was making offers on those, and we were able to just take them down one by one. He went and bought half of downtown Salem. Now, I'm not sure he might regret that decision, but he owns these beautiful buildings. He got in at a really low cost basis. They've had a lot of vacancy. It's been really hard to fill. He spent a lot of money on them, but it was just he naturally, instinctually was not doing enough deals and bought a different asset type because he could get into those kind of deals. Maybe that's the right decision. Maybe it's not. We'll have to decide that for ourselves.
So had he applied that skill set he had with someone who really knew how to optimize those types of deals? Because he doesn't know how to optimize those, right?
He learned.
He does
how
know
to
now?
do it.
Okay.
Yeah. He was the multifamily pro, and then now he is much more versed in office and retail because he owns a lot of it.
Okay.
He learned it as he went. He made mistakes. It cost a lot of money. I mean, he was writing some pretty big checks. He learned that it costs a lot more to fill up a $10,000 commercial space. You got it's 6 months on the market. You're negotiating with the state. They want an $800,000 TI. Like, I mean, this is the big boy game now. This isn't like, oh, somebody moved out of my apartment, I got to spend 10 or 20 grand. I mean, this is real money. So, yeah, I mean, you could ask him if he'd want to do it again. The problem is they don't appreciate as fast. And so, I think you can also, when you're trying to do a deal just for the sake of doing a deal, I think you can make mistakes. I think you will make mistakes. And I think you may go into an asset type you wish you'd never got into. You may go into a deal that wipes you out. I mean, you might be doing great on your first 10 deals and killing it, decide you want to switch gears, go into a different lane, and that one deal that you do can just wipe you out. So I definitely think, to me, the guiding light isn't to do all the deals. The guiding light is to do all of the good deals. Do all of the deals that fit how we know how to operate, we know how to finance, we know how to raise on, like all the things that fit us, the deals for us, and let everybody else have all the other stuff.
Okay, so the summary of this is our bottleneck is acquisitions.
It's me. I'm the bottleneck. Even though you're the one that has to write 4 offers and you haven't written them yet. So I don't know. I got to get on you more. That's what it is.
Okay. So acquisitions is the bottleneck that we are going to figure out how to fix.
All right. We probably just confused everybody. We'll just play this back for ourselves so that we can figure out what we're doing.
Podcast is just for us anyway. So other people can listen or they can't. We're going to do it either way.
So if you guys are out trying to build a business or partner with people and buy assets, just know that there's some organization that it takes. You got to structure. And there's a lot of work to be done once you own those assets. Getting the assets is, for us anyway, that's the fun part. Chasing the assets and putting them in your real estate schedule. That's what we do because we're deal junkies. But we've talked about it before. Once they're in there, you have to actually take care of them. You got to run them. You got to do rent surveys, you got to underwrite, you got to keep looking at your deal and see if you're meeting your business plan or not. Like, there's a lot of work that comes after you own the asset. So
don't worry about that stuff, though. Just go buy a
deal. Yeah, you'll learn after you buy the deal. The problem is if you're not paying enough attention. Well, actually doing that stuff afterwards will help you buy the next deal better.
Yeah.
That's part of what sharpens the knife.
You learn from the deals.
You learn from the deals that you do on what kind of deal you do and don't want to do. If you just go out and do stupid deals all the time and you're always losing money and they're a pain in the ass, you won't want to go do deals anymore. So be careful that you don't do that because it'll burn you out.
Don't talk yourself out of a deal, though.
Yeah.
You gotta do the deal at some point.
Especially the first one. All right, guys. Are we wrapping it up?
Yeah.
Okay. Thanks, Deal Junkies, for listening. And if you like this episode, please share it. And again, we are so thankful for our listeners. I don't know how many listeners we have now, but however many of you there are, we are super, super thankful for you. And we hope that we're helping you, inspire you, and teach you how to go do more deals. We'll see you next time.